We're having a few technical difficulties, so I'm going to actually just use my own laptop. So a bit of background on me. I was a futures trader, a derivatives trader for 30 years. I worked for multiple banks around the world. I've traded every asset class known to man. In 2012, an interesting man who's a very good friend of mine, a man called Greg Metcalfe, who was running the Australian regulator, ASIC at the time, who was also chair of IOSCO, came up to me, and a moment I'll probably never forget, in a blinding moment of enthusiasm, said to me, "Loretta, you need to go and have a look at this thing called blockchain because it's going to change the world." We have daughters the same age. So I went and looked at Minecraft because I thought he was talking about Minecraft. Luckily, after a weekend on Minecraft, I was very confused about how that was going to change the world. And when I went back to him on the Monday morning, I said, "Dude, you've lost your mind." And he was like, "I have no clue what you're talking about." So once we discovered that we were talking about blockchain, not Minecraft, I was very, very happy. So I went and read the book, The Blockchain Revolution. Now, I have a reference document, which I'm happy to share with you all, that has taken me 5 years. It's probably got the best reference documents in blockchain in the world, from the Financial Stability Board to FATF, to Andropoulos, to Buterin, to Nick Szabo, who was the first person to speak about smart contracts back in 1993, the cyberpunks. I'm very happy to share it with you all. So it's a pleasure to be here. So moving on from that, I actually, because I was a trader, my biggest problem being a trader across asset classes was the post-trade processes. So it takes somewhere between 1 day and 3 days to clear a trade, no matter what asset you're trading. If you're trading water, it's 38 days. Don't ask me why. So it was one of my biggest pains in my P&L when I was a trader. It was like I could never manage my portfolio and my balance sheet because my trades were always out for the post-trade processes. So when I read The Blockchain Revolution, I went, "Oh my God, this is a solution. I can bring post-trade processes from T+3 to T+0. Problem there, stock exchanges around the world intermediate markets. The reason we have clearing and settlement is because we didn't have technology when we built these markets 20 years ago. So as a point in example, the Australian Stock Exchange holds $4.9 billion every night overnight in collateral risk management, held by guess who? The 4 biggest banks in Australia. It's actually mentioned in the Corporations Act of Australia that they have the monopoly. So I went to the minister, I said, "This is wrong, we need to take this out of the Corporation Act." And they said, "You can't do that, Loretta." And I said, "Well, watch me." He's now my Prime Minister, so he actually gets blockchain. So I actually had the law change. So that was my first introduction to law changing because I'm a banker, not a lawyer. The second thing I did, I tried to buy some Bitcoin. Most difficult thing that I've ever done in my life. I was like, "Oh, dudes, you guys have got no idea how these things should work." So I wrote the self-regulation for Bitcoin in Australia in 2014-15, and I set up the Australian Digital Chamber of Commerce. That went quite well, and I think 27 countries adopted my self-regulation. Then I went to the Australian government and said, "Now I'm advising companies, I've got Bitcoin, what do I do?" The tax office looked at me as though I had 40 heads. So we all sat down in the Australian government, we said, "What are we talking about? Are we talking about digital assets? Are we talking about virtual currencies? Are we talking about crypto assets?" Not one of them had the same answer. So I spent 18 months with my own government, working between the government divisions, working out what the hell this was. So we traced back the first transaction of Bitcoin. I think it was in Nebraska, I may be wrong, but it was a commodity. So a digital asset is a commodity. So Australia being a mature market with one regulator, one government, it was very easy to do this. So it got a bit difficult because legislations are very hard to change. My Prime Minister at the time said to me, "Loretta, I can't win votes by taking my innovation policy out to the local hairdresser that sits in the western suburb of Sydney." So I said, "Good, I'm leaving." 16 months ago, he said to me, "Loretta, when I told you to leave the country, I didn't really mean you to go and do that and do it in other places, but I did." So I've written the first Digital Business Act in Bermuda. Last year, we were the first country to legislate. I know our previous gentleman was talking about frameworks. Frameworks are not law. Once you have law in place, it's law. So Bermuda has what they call the DABA, the Digital Asset Business Act, which is very, very harsh. So it talks about beneficial ownership. I'll get into it a bit more in detail. Having companies on island, head office requirements, all the things that people like FATF worry about. So personally then, my journey's been to be the bridge between the old world and the new world. The anarchist and the decentralised world of what Bitcoin is does not fit into the centralised world, and I don't like the centralised world because I worked in it for many years and they almost killed me. So I've spent the last 7 years of my life going to university courtyards in Russia, slums in Delhi, pinball parlours in New York, trying to figure out what the hell Bitcoin and associated protocols were. I taught myself to code at 40. My 9-year-old, I taught her to code. She codes across 5 protocols. So I get this space better than anyone. I sit as a bridge between policy and governments and the industry. And if the internet taught us anything, if we don't collaborate, if we don't start to write regulations that allow innovation but keep out bad actors, we're not going to work. So consequently, at the moment, I'm the OECD advisor on blockchain. I advise the government of Bermuda, the government of Antigua, the Central Bank of Jamaica. I've written the first ever licensing requirements about digital assets in Mauritius, which will be released tomorrow. I wrote the Act in Bermuda. I advise the Australian government. I'm the advisor to the Prime Minister of Serbia. I advise the Slovenians. And I've now just been put on as an expert policy advisor to FATF. Does anyone know who FATF is? The Financial Action Task Force. Okay, these are the dudes that shut down countries. They blacklist you and sanction you when you money launder or you promote terrorism financing. This is one of the biggest problems that regulators and policymakers have about this space that we talk about. So thank you for having me today. This program looks really excellent. It's really good to be here. I think we've seen from the discussions over the past couple of days that this technology really is driving new forms of fintech innovation and new breeds of financial products, processes and platforms. Obviously, blockchain is going to be my focus, and I'm going to tell you about what I do at the OECD because I think this is very relevant for regulation. So look at the present of blockchain by taking stock of where we are in blockchain and in its form at the moment. Last year marks the 10th anniversary of Bitcoin. And with that was the inception of blockchain technology. Many of you know I've looked at this blockchain, if you know who I am, since 2012. As I said, I taught myself to code. I've worked with regulators and governments in this space since 2013. I gave my first speech, actually, at a cybersecurity conference at the Pentagon with the Australian government in 2015, one of the scariest things I've ever done, on blockchain. Since then, I've given many speeches and talked to many people and many regulators, many heads of states and many central bank governors. My interest was sparked, as I said, when I looked at using blockchain to solve the T+3, the post-trade processes for asset markets as we see today. I think the decision to replace ageing platform systems with payments and settlements with a distributed ledger technology works. We take out the need for processes and procedures by back offices, make them much more efficient and much more reliable and secure, because that's what blockchain does. It's secure, immutable and transparent. Nothing more than a database, some argue. I think Rabini will tell you it's nothing more than a glorified database. It's much more. Bitcoin gave us one thing in the world, and it was the new security level of the protocol of the internet. One of my greatest mentors in the world is a man called Robert Kahn. Does anyone know who Robert is in here? Robert Kahn, does anyone know? Thank goodness one person. He gets so upset about that. Robert Kahn sent the first TCP protocol of the internet to another man called Vint Cerf. So he was the father of the internet. If there's anybody that knows the technology, it's him, because what we use today was created by Robert Kahn. So everything that I talk about and blockchain, I use him as a reference point. I use Lord Meghnad Desai, who was sitting with Nixon the day we got rid of the gold standard, who's the chairman of the London School of Economics, who's considered one of the 4 top macroeconomics in the world of this century. Both of them are 85, so I find this a bit of a dichotomy that I speak to a bunch of 25, 26-year-old protocol developers, and I've got Robert Kahn, who's 87 on one side of me, and Lord Desai, 85 on the other. So this technology does go beyond boundaries. So I think, since I started doing this, we've got to look at the risks and the ramifications for regulators, and this is why it's very, very important. We've seen the rise of initial coin offerings. This ICO is a new type of blockchain-based venture capital. We've raised over $40 billion for, and startups in the last 12 months. I agree with the last speaker. I think the regulation we've seen said that hype of that market died down. It's also seen proper management come in. The scams have gone. I don't think the hype will continue, but what I do think is STOs is a new market. We think this was a $20 billion market in ICOs. Security token markets, I think, can go into the trillions. You heard it here first. I think this is the next big things because security tokens have a BAS-backed asset. ICOs didn't have that much. The other interesting thing to look out for this year is in my predictions is stable coins, looking at where people will use stable coins. So billions have flowed into these well-funded platforms. You know, we can send money across borders now. We can execute atomic swaps. I did a pilot with the World Bank at a bank in Australia where we atomically swapped bonds. So we took out credit risk, default risk, because that's why the GFC happened. This is quite funny. The Bitcoin protocol came out of the GFC because we don't believe that we trust governments, banks, and governments and institutions to trust. Having the blockchain technology takes out our need for trust because we take out third parties and intermediaries. So having the ability to atomic swap assets now with blockchain technology is quite possibly the most exciting thing I've seen. And that comes into tokenization because I think Bitcoin and cryptocurrencies was the tokenization of money. The liquidity we see into asset markets that have been very liquid up until now, we can tokenise, opens up new ways of liquidity, secondary market functions like we've never seen in history. So the next 10 years is going to be very, very exciting. Blockchain is on the policy agenda in many countries. As I said, the smaller countries we've been working in have written legislation have actually led it. We've led the G20. We've led America. We've led Europe because they're nimble, they're fast, they need to be innovative. I live in a country in Australia, 95% of the population are banked. Why does the central bank need to worry about remittance payments? Why do they need to worry about the $250 that I send as a migrant worker from Australia back to my grandmother in Gujarat, and it costs me $50 to use the networks that I have to use now to move that money when I can start to remit money for much, much less. If I'm moving $50,000, it doesn't matter. But if I'm moving $200 a month back to my grandmother and it's costing me $50 to move it, that hits my bottom line. The World Bank, as I said, illustrated blockchain's potential when it offered the first blockchain-based bond with Commonwealth Bank of Australia. I helped do that, as I said. That brought settlement times from 5 days to 5 seconds. Broadly speaking, blockchain is beginning to live up to the promises in the financial sectors it's been talking about. It's driving, as I said, efficiencies in financial processes, raising funds like we saw with ICOs. I think STOs are the next way. And it verifies information without trusted third parties. These developments make it easy to forget, though, that blockchain is a technology that's still really new. You know, it's in its infancy. Remember, Bitcoin only came around 10 years ago. The internet's been around for 40 years ago. Bob Card started working on the internet in 1953. So we're looking probably standing at, we've come a long way in 10 years, but we're not there yet. Most of all, it's still not it's not mainstream. Financial applications are still in pilot phases. None are fully scalable at the moment. I think this year the whole community needs to get together. We need to talk about interoperability, scalability, and mass adoption. The protocol developers need to stop arguing with each other. Just agree to go and build stuff. I don't care if you're a Bitcoin protocol developer, you build Ethereum, you build Ripple. Unless you all start getting your egos out of the way and start talking, we're not going to be able to have enterprise building. That's my thought. Many ICOs have failed to get off the ground, from their funding phase. They've taken this money. Some people have put their hand up, they've lost money in it. While reliable data is patchy, reports of frauds are still really widespread in ICOs. One estimate put the rate at 81% of all ICOs that have been done have been fraudulent. I think the projects I talk about, like on some of the stock exchanges, these are still about 2 years from being mainstream because it's still new technology. You can't go and put the entire equity system of Australia on a blockchain, $1 trillion economy. It's not going to work. I've argued about that for 3 years. We could not just move from existing systems to new systems without testing. Empirical evidence showed us it has to work. It shows us that this stuff works. We can't start tethering things like Bitcoin to money supply because commodities to Bitcoin, we don't know what happens. The financial system as it stands has worked for 400 years in not the best way, but it still works. So we just can't move systems randomly overnight and expect them to have magical implications. The World Bank bond still needs to be settled with traditional channels in cash. So while it's a remarkable achievement, it's still a way away from what we imagine blockchain to do. Blockchain has been described by its critics as a glorified spreadsheet. Thank you, Mr. Rubin. But in its most, the most advocates of it, it's the ultimate form of democracy. Disintermediate markets. Friction in system has been created by third parties for too long. They've made money out of that friction just because they can, because we didn't have technology. As with most things, the reality relies somewhere in the middle. I think policymakers like myself need to be able to make a sober assessment of the technology and its impacts on public outcomes and its future direction. It is the job of international policy institutions like myself at the OECD. Our mission is better policies for better lives. And the IMF to help us do this. Recent research that I've done with the OECD shows us where blockchain right now and where it might go in the future. We're looking at funding for SMEs, financing. We've already done that. It's a great paper. Go onto the OECD website and read our paper around ICOs. It's awesome. It took me 6 months with 20 interns to write, but please read it because it's really good. We're putting a new chapter out on equity market reviews in Asia, looking at the potential in equity financing, especially for larger public offerings. I still think, our analysis on ICOs and ICOs, stablecoins and security tokens, from conception to product launch weighs up the benefits and the limitations of how we do this. So there's still a lot of work to be done. I'm not going to go into too much detail on what these are, but I'll highlight my conclusions on the long-term policy effects and regulation and the broad implication for regulation and policy. So ICOs are seen as a bold new way to finance entrepreneurial activity. But even in a more mature, safe and regulated form, they're only going to be useful for one type of project. ICOs are useful for products and services that run on a distributed network. For an SME to benefit from this fundraising, there needs to be business rationale that requires the use of blockchain or DLT solutions to address the consumer needs. For entrepreneurs issuing tokens without a business model, don't go and do it because you're going to get arrested and it's not going to work. I think this model, tokens will have limited use and value. ICOs, therefore, I think are very limited for mainstream. That's why I think, as we talked about, security tokens are much more readily usable for mainstream financing. From a policy and regulatory perspective, most governments see ICOs and ITOs as a positive step towards alternative financing mechanisms which we've never had available because the venture capital guys and the private equity guys have not been so nice to the ecosystems and tech companies, startups for the last 10 years. It's about time that we gave them a run for their money. But in their current form, I think ICOs still have legal and regulatory uncertainty. I think blockchain in public equity markets, moving on, we need to look at similar usefulnesses. That's why I think initial security offerings are very, very useful because they can be captured as IPOs. We found blockchain technology currently lacks the capacity to meet the requirements of today's market infrastructures though, and it ultimately needs to overcome a number of significant constraints, making sure I'm not running out of time here. So smart contracts are not there yet. You talked about it, but you show me a smart contract that works. We found that blockchain-based IPOs wouldn't eliminate counterparty risk totally because smart contracts have not reached a level or a reliability, a sophistication or legal status to do it. Permission networks, I think, are necessary to curb some of the benefits. Blockchain-based IPOs need permission networks because reducing information asymmetrics and boosting transparency relies largely on the same mechanisms that we use today to do IPOs. And the ecosystem's still not complete. For example, the quantity of tokenised fiat currency would be required for IPOs. That just doesn't exist at the moment. That's rapidly changing. I think that'll change in the next year, but we're not there yet. And I said, as I talked to you before, look at stable coins because I think in the next 6 months, a central bank is going to come out with a fiat-backed stable coin. Keep your eye on that. Central banks are looking at this very, very closely. I advise 7 of them. This doesn't mean there's never going to be use for blockchain in public equity markets, but it means that we're not there yet. Slow, measured responses are important. So what's the future? As I said, I run the Policy Centre for Blockchain at the OECD. I've given some indications, where I think we're headed. Design and governance of blockchain networks is very important for policy and regulation. The emerging mainstream uses of blockchain in finance and the successful pilots and experiments we've seen have all used either private permission networks or private layers on top of public networks. So people using the Bitcoin network or the Ethereum network but building layers on top of it. I think we're going to come out with the hybrids. I think the decentralised models of what we're looking at about Bitcoin and Ethereum at the moment are just not there. We do need to look at the hybrid models. These kind of networks are probably the future of mainstream use of blockchain across institutions. Blockchain will be distributed, but I don't think it's going to be across the large public networks in enterprise as we see. Maybe in 20 years, but just not at the moment. Practically speaking, the constraining issues like the high energy use, I've got some solutions around that, and slow processing speeds. The ability to scale is still there for the big blockchain platforms like Bitcoin, but it's a trade-off. And the more open the network, the more secure it is, but the less inclusive and the less transparent. This means that the question of governance, this is what regulators stay up at night about like me, who make the rules of the network very important. There's a risk that blockchain ends up just being a consolidated economic power run by the people that run the world now. None of us want that. Interoperability and interaction with other technologies is crucial. The need for these networks to have a common theme has been in all the discussions that I've had with regulators and central banks and stakeholders across the industry. For example, companies in clothing and extractive industries looking to use blockchain for supply chain due diligence is really important. Blockchains will be used eventually across every industry we know. They will revolutionise everything from supply chain to governance, to provenance of goods, to even electoral systems, to land titling. Fully realising the benefits means that networks will need to talk to each other. So what I say, we all need to start talking to each other. Interoperability, to me, is the number one key of 2019. By the same token, blockchain's ability to automate interactions and securely transfer data and value means it's probably going to be the most important part of how the Internet of Things transacts with itself, and it also requires a large degree of interoperability. We're in an age where technology is purposely fragmented. The big players have done that on purpose. Vested interests have big roles to play, and let me tell you, they're not going away soon. They don't really like people like me, but that's okay. I'll deal with them. And digital consumers exist in walled gardens. Private distributed networks come to resemble closed-off ecosystems like we see already in the current digital economy. The gains of blockchain and other technologies can be diminished if this continues. I think blockchain, AI, and a lot of other emerging technologies will merge. I don't think this is just a conversation about blockchain with regulation. So policy responses. How do governments respond to this decentralised finance and seek to make their borders relevant? Because decentralised systems across borders takes out the need for borders. The answer to this is probably the single biggest element that's going to shape blockchain innovation and adoption in the years to come. This is partly an extension of the issues we're already seeing with taxation in the digital economy. The taxonomy across these things like ICOs has been difficult, but blockchain will blur the jurisdictional boundaries of economic activity even more. It's a big part of its great potential, but it also presents the biggest problems for core governments and things like activities that government do, tax, market regulation, and the ability to issue currencies. It remains to be seen, I think, how central banks are responding to stablecoins. I think they've been very positive. The conversations I've had in the last 6 weeks have been very different to they've been in the last 6 years. And I think they'll address some of the shortcomings that I've talked about previously. These will be changed in the next 6 months. This technology is moving so fast. Scalability, you look at the Lightning Network around Bitcoin, the way that smart contracts are moving. The next 6 months in this industry is probably probably like we've seen the movement of tech for the last 10 years. It moves so fast. So my conclusions on this. Technology is diffusing markets at faster rates than we've ever seen possible, but it's not instant. While reviewing blockchain's present and future, it's clear the technology has a long way to go. It's moving rapidly, and its development will depend partly on government policies and people like me to find a balance between policy and technology. Policymakers need to be aware of the benefits of innovation arising from blockchain, the distributed ledgers and related technologies, but the issue also comes from the technology faces lots of problems at the moment, and governments can't answer the questions on interoperability and scalability and mass adoption. That's not their role. Importantly, we have to realise that we're not operating in a vacuum. Through international organisations like I do at the OECD, I work across the OECD, the IMF, the Financial Stability Board I'm an advisor on. I work with IOSCO, which is all the regulators. I work with a number of countries. I work with a number of regulators separately. I work with FATF, the Financial Action Task Force. We need to share best practices and ensure impartial analysis and advice to make sure that blockchain has a positive impact on the lives of everybody. So, quickly, just getting back onto the things to consider in regulation. Last week, in Mauritius, just produced the first the first regulation around the custody of digital assets. So we will be the first jurisdiction in the world which has a proper custody licensing requirement for you to hold digital assets. Because up until now, banks hold money, they hold my gold, they hold my land title. Nobody knows how to hold my Bitcoin. And the exchanges have been hacked. We've seen so many bad experiences. The Quadriga thing the other day, when the guy lost however many million passwords in his head. We need to stop things like that happening because we won't get mass adoption and we won't get credibility if they keep happening. So I think the further to a report that I sit on a committee in Mauritius, we've come out with the recognition of digital assets as an asset class. It's suitable for only sophisticated asset managers at the moment. That's the Mauritian jurisdiction. In Bermuda, it's for everybody. So different jurisdictions are looking at it differently. But I think this regulatory framework, which for the licensing, is actually effective as of tomorrow morning. So if ever you want to go and apply for hold custody of a license of a digital asset, please go and have a look at Mauritius to do it tomorrow. I think we're the first jurisdiction to do it globally. Holders of this asset licence will equally have to comply, though, with the framework for AML and CFT in line with international best practices. I think the most important thing about this was that we got the backing of the Prime Minister, who said, in revolutionising the global fintech ecosystem through the regulatory framework for the custody of digital asset, my government reiterates its commitment to accelerating the country's move to a digitally enabled economic growth and to helping the African region. I think that's really important here today. As an African country, we look further to fostering further innovation and bringing more prosperity to the region. That's why I sit in Mauritius, because it's a great gateway to Africa and India. These are the emerging markets where this technology has the most impact. Same in the Caribbean. I think, if you're looking at places like Jamaica, the Bahamas, Bermuda, one thing I will say, it's all very well to have a framework, but if it's not in law, it doesn't have much use. The Swiss have a model as well. So in Bermuda, our regulation says that if you have to have a company that sits on island, the beneficial ownership has to be taken care of. You have to have a responsible board. All the stuff as you would normally set up as a company. But the two things I think, and it came out of the meeting that I had with FATF last week and the 298 countries was that you need enforcement. How do regulators enforce this? There's two ways. Financial services regulators enforce it by revoking licences, if required, and sanctioning large fines. So in Bermuda, it's a $10 million fine if the promoters are found to be not doing what they're doing and the company is not in line with CFT AML practices. And it's also criminal enforcement, it's 10 years jail. So once you start to put enforcement from a criminal side and a financial services regulator side together, the bad actors are not going to come. Let them go to the places where it's easy. But the problem is, I think, for the ecosystem, you need to understand regulation is very important because you can't scale your business back into a proper mature market if you are regulated very lightly in a market that is not looked at by the rest of the world. Very important. You want to scale your business back into America, Australia, Europe, you need to be in a market that's regulated well. As I said, things to consider. Is the regulatory approach principle-based or rule-based? I think, it needs to be principle-based. Rules don't work anymore in this new environment. What jurisdiction are you sitting in? Is it fintech specific? So I work across Malta, Mauritius, Bermuda. I'm running out of time here. Am I getting wound up? Okay. So all the countries that I worked with, I've done for a very particular reason. I'm Australian. The British mightn't have given us much, but they've given us 52 countries in the world, the Commonwealth. We all have the same law system. I'll share all this with you, but what I envisage in the next 5 years, I don't want countries to have treaties of taxation. I want countries to have treaties of technology. I want Australia to be stand with Africa. I want Australia and Malta and Bermuda to say, guess what? We've got exactly the same regulation because it's one standard. We as 52 countries that are regulated as the Commonwealth can do it. America's a big mishmash because every state has different regulations. Europe's a big jar of spaghetti. You've got too many countries. So you deal with the federal, you deal with the Commonwealth where we have the same law system, you have one regulator, and we can actually build harmonised regulation that can fit purpose. So I think that's really important to note, and that's starting to happen. And we also need industry. Industry needs to step up. Industry standards are starting to happen. Industry is starting to comply with what they need to do. So that's my take it in a nutshell. I think cryptocurrencies are just one part of a digital asset. They are one subcategory. I think the most important thing for you all to take away from this too is that regulators and governments are now looking at the tokenisation of everything. It's not about cryptocurrencies, they're a subcategory. Imagine now we can land titles, we can tokenise diamonds, kilowatt hours of energy. The liquidity markets, the liquidity pools we can open up in secondary markets is what we've never seen in history. So this is the most exciting thing to me, is the tokenisation of everything. And having regulation that is uniform and harmonised, that pushes us all together as the world, because the internet taught us one thing. The walled garden approach to this does not work. We, as policymakers, industry and governments, need to work together. And for the first time in history, we actually do. So thank you very much for listening to me. I hope that was useful. I'm around for questions.
Thank you so much, Loretta.